Fidelity, Access, GTCO, Zenith. These are banks that recently have announced that they were selling their shares. They've been asking us to come and buy a slice of the orange. In the words of GTCO. In fact, I think that the guys at GTCO, their marketing team, they need a raise. They have done a good job. Everywhere you turn, GTCO is telling you, come and buy shares. Come and buy shares. You turn in the toilet. You turn in the kitchen. Everywhere you go. Guys, we have seen a lot of these banks coming out to say, come and buy shares, come and buy shares, come and buy shares. And a lot of Nigerians are becoming weary, like, why are they selling their shares? What's going on? What's going on? Well, mostly because CBN released a circular about some months back saying that, they were changing the recapitalization of their asset base of every Nigerian bank to a certain amount. And so because of this, many of the banks now have to find a way to raise capital. So the essence of this recapitalization is to ensure that they have a more, they have a more robust asset base. So based on this, many of these banks, they have now tried to, put out a new offer to be able to gather this money that has been requested by CBN. So let's start with Access. Access is giving a rights issue, and they're not giving a public offer. A rights issue is when a company offers its existing shareholders the chance to buy additional shares at a reduced price, usually to be for a time frame, and you have the right to accept the offer or not. It's not compulsory, but it is for existing shareholders. While Fidelity is giving a public offer, GTCO is giving a public offer, and now Zenith recently just announced that they were asking for a public offer. So the way shares work is, when you buy a share of a company, you become a part owner. Even if you have only one share, you have one share. Your share may not be important, but it is still a share. You have a share of the company. That's why GTCO is telling you to get a slice of the orange. So on that premise, many of these banks have started doing it. But now the question people have asked me is, what do I think? Which bank should they go for? Those that want to invest in shares. Okay, first of all, is investing in shares a good idea? Yes, it is, but don't invest in the shares. Stock market generally, whether it's American stock market, Nigerian stock market, don't invest for the short run. It has to be for the long run, because the markets are always volatile. There will always be ups and downs. So if you're buying shares, buy shares because you are looking at the long run effect. You want to build capital over a long time, right? That is how to buy share. Don't buy share with, when they now say, the market is going down, you go and quickly sell your shares. You are going to be, you are not ready. That's the word. So if you must buy shares, know that. Number two, have a goal for why you're buying shares. Am I buying shares because I want dividend, right? I want to have passive income. So if I want to have passive income, that means that I have to ensure that the bank that I'm going to buy from, they always give dividends. Not bank that will always be retaining earnings. Because if they are retaining their earnings, it's useless to me. I need my dividends. I need the passive income. So know that. Check. Be sure. And how can you check? You can seek a financial advisor, or if you are familiar with financial statement, download their financial statement. Thank God, that's why it's a public company. There are many companies in Nigeria that you don't see their financial statement, but the ones that are public must publish on the Nigerian Stock Exchange, or Nigerian Exchange as it's called now. So their information is very public. Get their financial statement. Check how much they give to dividend per share, dividend yield. Check all these things. That is how to know a company that pays dividend and a company that retains their money. So if you don't mind, if they are retaining your money, then you buy. If you mind, you don't buy. Those are the things to note. Check the company's history. Although there's a mindset, Psychology of Money's writer Morgan says that history does not always tell what the future will hold. So just because a company is profitable history-wise does not mean that they will be profitable moving forward. Yeah, I had to put that in there. So based on that, which of these shares do I advise as a chartered accountant or someone that has done, so I'm going to be doing like a breakdown of these different shares. I'm going to be sharing a screen right now, an Excel sheet showing you different shares, how much they are charging, how much their last year dividend was, and everything. And I'm going to show you guys whether you should invest or whether you should not invest. Okay, so this is my spreadsheet here. I have analyzed Access, Fidelity, GTCO, Zenith, and FCMB. These are the ones currently selling shares as of the time that I made this video. So this is their analysis for the previous year, 2023. This is their 2023 record. Yes. So from this report, you can see that the average share price is quite low for FCMB and Fidelity. So meaning that if you have 100,000 naira to put on Fidelity Bank or FCMB, you will be able to buy more shares than you can buy in other banks. So the EPS, on the other hand, is the earnings per share. This shows you how much a particular company, how much share, how much profit your share is making. So if you have one share that you have is making 18 naira in Access, 3 naira in Fidelity, 19 naira in GTCO, and so on and so forth. Now for the dividend per share, you can see that, for every share you have, this is how much dividend you'll be making. So you can use it to know how much you are going to be making. So if you have one share in Access Bank, you get 2 naira, GTCO 3 naira, Fidelity and FCMB is quite small, but the thing is you have to compare it to the price that they are also selling to you, and that is what our dividend yield calculates. Our dividend yield is a measure to calculate the ratio of how much a company pays in comparison to how much they collected from you. So based on the market price, so you bought something 13 naira, someone that bought something 13 naira, someone that bought something 10 naira, you cannot be getting 20 naira dividend on the 10 naira stock. So it is the dividend you're getting. Use it to compare the amount you bought that thing, to be able to know the percentage. That's why it's a percentage, to know that, okay, I'm actually making 10% on my investment, I'm making 5% on my investment. It's not about the price that they are giving you, it's about the investment, the ROI. So from this analysis, you can see that Zenith is actually giving more, followed by GTCO, and then Access. So now we're going to calculate our PE ratio. PE ratio is the measure of our market price per share over our earnings per share. So what this price earning ratio calculates is how much a financial it basically calculates the overvaluation of a share or the undervaluation of a share. So it's basically calculating the perception. So your earning per share, if your earning per share is say 1 naira and your market per share is 3 naira, this tells you that your people perceive your business 3 times better. Your money can make you 3 times. It's the potential of what your money can make. So it basically calculates overvaluation and undervaluation of shares. It tells you how a particular stock of a company is doing. Right. So a high PE ratio means that relative to earnings, the company is actually doing well. So based on that, looking at our schedule, we can see which company is much more profitable. So based on everything you have seen so far, which company do you think you'll be going for? Thinking about the fact that the money you have. So meaning that if you even have 100,000 naira, you'll be able to buy more shares in certain banks than in some banks, and your results, that is the earning, the PE ratio, the dividend ratio, the dividend per share, will still be economical. So based on this, I hope that this video has been helpful. If it has, leave a comment, tell me what you think, which one will you be investing in based on this analysis. Let me know your thoughts. I am thinking of it too. I don't have any shares in any of these banks, so just like you, I'm just like you. I'm still thinking which one I want to go for, and if it's really going to be profitable in the long run. Anyway, on this basis, thank you so much for watching. Make sure to subscribe. Subscribing is absolutely free. Yes, I have to say it. And I'll see you in my next video.